Hello, everyone. I am David Wilson of FundUuP, and welcome to the BFF Business Funding Forum. Try to do these as pop-ups. So this is our next pop-up BFF Business Funding Forum, where we talk about different topics in business funding, and that's exactly what we're going to do today. We're going to talk about the three main reasons traditional banks, so your everyday, down the street, local, regional, national bank, turns down your business loan application. The three main reasons banks turn down business loan applications. So a little bit about me. My name is David Wilson. I'm managing principal of FundUuP. FundUuP Business Funding. We help small and mid-sized businesses get funding, both secured and unsecured, when traditional means are not available. And we do that when there is a challenge in one of the three areas we're going to talk about today. One of the three areas we're going to talk about today: a challenge with credit, a challenge with collateral, or a challenge with time. So let's just jump right in. If you like what you hear here, if you like what you hear here, share it with a business owner friend of yours. Share it with a colleague. Share it with someone you know who you think may benefit from learning about this. And you can like, share, comment, follow wherever you are watching this broadcast. All right, so let's start with credit. So the first main reason business banks turn down business loan applications is because of credit. And quite simply, the credit is just not high enough. Typical threshold for credit, and we're talking about personal credit of the business owner applying for the loan, personal credit. I have heard recently anywhere between 650 and 680. I think 650 used to be the minimum. It's gone up based on most of the bankers that information that I've gotten, and it's around 660 to 680. So simply put, if your credit falls below that floor, the process stops. So any type of application, any type of evaluation, underwriting stops if you don't meet that threshold. So the first challenge is credit. Okay, credit. Second challenge is collateral. Okay, so many people, well, what is collateral? Collateral simply is something to secure the loan, something to make the loan less risky. So in case something happens to the loan, there's a default, the bank can take that security and sell it and get their money back, in short. So that's really that's really what that is. And if you have a challenge with collateral, so what are the challenges you can have with collateral? Well, you can have not enough collateral. So if you're seeking $100,000 and you only have $25,000 worth of collateral, you don't have enough collateral. Maybe there's something wrong with your collateral. You see this more in real estate. So you might see a real estate investor who was looking to borrow $1 million secured by a piece of real estate, and it's not complete. So they want to complete the real estate. They want to finish it. It was abandoned, let's say, mid-project. So that would be a challenge. And of course, the biggest collateral challenge of them all is what? There's no collateral. We don't have any collateral. So a lot of times what banks will look for, the main collateral they'll look for is personal residence. And a lot of my SBA friends out there, traditional bankers out there, they're going to look for that piece of real estate, that primary residence, that a commercial building that you own. If you don't have that, then the loan is not collateralized. You don't have collateral, at which case the process will typically stop. if there's no collateral. So again, challenge with collateral. The third area that is a major reason for banks turning down business loan applications is the challenge of time. So what does that mean? So time for what? So 3A, time in business. Usually banks are looking for you to be in business for 2 or more years. 2 is the minimum, right? 2 is the minimum. And 2 years, sometimes they're looking for 2 years of tax returns with those 2 years in business. So some will focus more on the time, some will focus more on the fact that the tax returns were filed. That's gonna vary per bank. In more cases, I've never seen a case where a traditional bank funded funded a business loan application if the business has not been in business for more than 2 years. So again, the process will typically stop there. The conversation will stop. So that's 3A. 3B, time in which the funds are needed. So let's say everything fits. No challenge with credit, no challenge with collateral, have all the collateral you need. Been in business 12 years, but challenge with time in which the funds are needed. So our traditional bankers out there, SBA folks out there, they are simply not able to move in, let's say, a week's time to get the funding a business owner needs. So the business owner comes to the table and says, we need $500,000 to buy a competitor. We need $500,000 to expand our business very quickly because we have a contract that we can take advantage of, but we have to do it now. And we don't have time to wait. Or, hey, we're in a jam. We need $500,000 to make payroll because we're waiting for a contract to pay. We're waiting for a client to pay us, and we know they're going to pay. It's just a timing issue. So a challenge with time, right? So because banks can't move that quickly, that stops the conversation right there. So those are the 3 main reasons why banks say no to business loan applications. So what do you do? So are you telling me, oh, well, that's just the end of the road? There's nothing you can do. No, that's not what I'm telling you. Here at FundUuP, that's exactly the client we can help. That's exactly the client we can help. So those same 3 reasons why banks will say no are the same 3 reasons why FundUuP may say yes. Okay, let's go through them real quick. So again, go back to number 1, credit. Credit is not as important to us as it is to a bank. The lowest credit score we've ever successfully funded of a business owner's personal credit score was 350. And we were still able to get his company funded simply because of the strength of revenue. So we're going to look at the revenue of the company first and foremost. And that's where we start. We don't start at credit. Now, credit will affect the amount of funding, the term of the loan, but it won't necessarily affect the funding. So let's talk about collateral, number 2. So we fund deals all the time with no collateral. So the collateral we're looking at is the collateral of future revenue. So we are actually providing our funding based on the strength of revenue of the company, and we are looking out into the future, if you will. So we are going to really, the structure of our of our loans is we are paying for a certain amount of your future revenue over a period of time at a discount today. So if you're seeking $100,000 and you don't have any collateral, but your business does $1.2 million annualized, we'll give you $100,000 for $145,000 of future revenue over the next year, over the next year and a half, over the next however long, 2 years, 6 months, 8 months, 4 months, whatever the case may be. However the deal is structured. And that ends up being a great deal for the business owner who doesn't have any other options, can't go anywhere else, but can still get the funding they need, even though they don't have any collateral. The third third main reason banks say no is time, but that's not so much a challenge for us. So let's start with 3A, time and business, right? So remember, 2 years for the bank, we're looking at 6 months. 6 months for us. The youngest business we ever funded was 4 months, right? So 4 months. We don't really promise that. That was an exception. Very strong revenue just from day one, but 6 months strong revenue. We were able to get them the funding they needed. And then 3B, time in which the funds are needed. And that's pretty easy for us. Our promise is funding in 24 to 48 hours. So banks cannot fund that quickly, period. That's just not going to happen. So if you need that money to make payroll and you call us on a Tuesday, we can have that funded by payroll on Friday. That's happened multiple times. I'm pleased to say. So that's where FundUuP Business Funding comes in, and that's how we can help those who are affected, those business owners, those entrepreneurs who are affected by one of those three main reasons banks have to decline those business loans, those business loan applications. So thanks for watching. Once again, my name is David Wilson, Managing Principal of FundUuP Business Funding. We help small and mid-sized businesses get funding, both secured and unsecured, when traditional means are not available. You can like, share, comment, follow. You can find us on Facebook at FundUuP. FundUuP on Facebook, FundUuP on LinkedIn. You can follow me on Facebook, LinkedIn, YouTube, Twitter, and Twitch. So follow, like, share, comment, subscribe. Let me know what you think. And let's help as many business owners as we can get the funding they need to keep our economy moving forward. Once again, David Wilson, Managing Principal of FundUuP. Thanks for watching. And we will, one more thing. Columbo close. If your business needs funding, you can go to our website, www.funduup.com. That's www. F as in Frank, U, N as in Nancy, D as in David, U, P as in Peter.com. Click on the red box in the top right-hand corner, or the red box in the middle of your phone that says Get Pre-Qualified Now, and see how much you can qualify for in 24 to 48 hours so you can have the funding you need to run your business and prosper. Thank you very much. Have a marvelous day. Thank you for joining us on the BFF Pop-Up Business Funding Forum with David Wilson. We'll see you next time.